Welcome back to Palisade Radio. This is your host, Tom Bodrovics, and joining me today is a new guest to the show, Patrick Karim from badcharts.com. He's a proprietary capital manager and chart trader. How are you today, Patrick?
Hi, Tom. I'm great. Thanks for having me on.
Excellent to have you. Patrick, you have a background in psychology, and it helps you to understand the human factors to take into account when you're trading. Can you tell us a little bit about the emotional management that you have to have when looking at the charts and really trying to make a decision on a trade?
Yeah, sure. So we often traders, newbies or people, they go into the trade. This is going to go to the moon, etc. Even using terminology like going to the moon, right there, like it's emotion already, it's creeping in. You're not even like the trade even has an advance. Then you're starting to look at the daily, you're looking at hourly, and all that noise, that's all emotional noise like that your brain has to process. And if the whipsaw is going too strong in one direction, and then I'm going to sell, and after that the price action reverts. A lot of traders, I believe they went through that. So you really got to sync up, I think, your trading framework. So let's say you're doing monthly chart-based breakouts. You shouldn't be going on the minute chart and checking it every day, unless like you're a robot and you have strong emotional capacities and you've been doing this for years and you're able to manage that, and you know when your body is like starting to, or your brain's starting to overanalyze stuff. You got to really never underestimate like the impacts of the emotionality in your trading. And I don't know what the percentage is. It's probably like 90, 95%. Once you have like a mechanical trading system in place, still the emotions accounts for probably high 90% percentile could impact your trading. And I could go back to the sleeping analogy. If you can't sleep at night, or you're thinking about stuff, thinking about your trade, your position, is it going to bounce back up? You know something's wrong. Either like lower your position size, get out, reanalyze, but make sure that you're able to sleep, and then slowly like move up. And that's principally, you have to be aware of that. If you just go in and look at the charts and you think it's going to go to the moon, it's like a disaster waiting to happen. And it happened to me. And sometimes I'm just super lucky that in my beginning years, I didn't realize that this was impacting me, and I'd go all in. It's like a miracle like that I wasn't wiped out, and I'm happy today to be able to trading. But for me, like I'm an emotional person and analytical, and it's still a daily battle, still a daily fight not to let that emotion creep in. And like most of my charts, it's like monthly chart breakouts, but I'm still posting on Twitter every day. And sometimes I even pop out some 2-hour charts, 4-hour charts. And it's like I'm testing myself. It's like I'm Arturo Gatti, I want to slug it out. Instead of just doing the sweet science, Floyd Mayweather, and respecting my framework, it's like it gets the better of me. But if you want to have longevity, like a Floyd Mayweather finish 50-0, and you don't want to finish 20-10, like Arturo Gatti or some brawler, you gotta think about the long term. And I'm lucky I didn't wipe out at the beginning because of my emotions. And it's an ongoing battle and learning experience, Tom.
Absolutely. So part of that, your trading framework and having a plan and sticking to that plan really helps you, let's say, maintain that emotional stability. So what are parts of your trading plan when you're looking at precious metals, for example?
Sure. Well, precious metals, it really got under my radar, and I think in mid 2018. And the first thing, when I don't know anything about a new asset class or anything macro related, it's monthly chart, monthly candles. Closes. That's where I draw my trend lines. The wicks is noise from smaller time frames, just to get the clearer picture. And I knew gold right away. I saw that it was at 1350. It was a clear monthly defined resistance right there. So right away, that keeps me in or out without even having to deep dive or spend more energy. I could either just put an alert on the level I see right away, and when it's triggered, I come back to it, and then I could see. It gives me time to see peripheral charts, right? So let's say gold, and then I had to learn about the gold-silver ratio. I had to learn about silver, how it interacts, inflation, deflation, how the DXY, if it bottoms out, then how that impacts gold and silver, the VIX, right? As we saw, like in March, the VIX just exploded up. Well, what happened to gold and silver? They bottom. When the VIX topped out, then that's when gold and silver started going back up. I knew nothing of those relationships. So it's always trying to find new angles of attack, trying to get great try to follow great people on Twitter. If I could spin off on there, let's say North Star is one of the few I follow. Just you see how they do it, how they use, let's say, arcs to as a rounding bottom for formations. Then you could take that idea, how they're using it, and then apply it to a whole bunch of a plethora of assets in the precious metals assets class, GDX, JGXJ. And when there's like a synergy, sometimes like there are levers that they advance at different rhythms, but when there's a synergy and they all start breaking out close together on the monthly chart, on the weekly chart, then you know you have something special. And that's what I call the precious metals bull era. Gold led the way back in, I think in 2019, it broke over the 1350 level. And then you could look back, you could look at how did the precious metals bull eras behave in the past. And there was like always a 6 months to 1 year lag before the miners broke out. Silver, the same thing. So once you understand the precious metals complex with your framework on top of it, you really get a high probability weight of evidence there that you have a successful, that you've successfully identified the prevailing trend, right? And that's super important. So even if you have bad position sizing and you have a whole bunch of other problems in your framework, the 1 year moving average, or if you're above that when it's inclining, that could save your butt so many times because of the trend that's going upwards. The corrections are just going to be corrections, or they have a higher chance of being correction than being reversals. If you're on the smaller time frames, consolidation, it's like a coin toss. But on the higher trend, those corrections most likely usually get resolved upwards.
So as you're speaking about some of the guys you follow on Twitter, maybe share with us some of the other books that started to inform your trading from the beginning. Stan Weinstein, Stage Analysis, Peter Brandt. Give us some more books as resources to really show us where that technical background comes from.
Yes, sure. Well, at the beginning, there was nothing really. The game changer was Stan's book, Secrets for Profiting in Bull and Bear Markets. It gives any newbie some notions of money management. It gives trend trading. Like, if you had just to read one book, that'd probably be the one. It should be mandatory for anybody opening a brokerage account or some type to give them at least the basics of to be on the correct side of the trend. Peter Brandt, it was great. So Peter Brandt is an old school classical charting master, measure moves, no nonsense. The ticker, you could it could be Apple ticker. You could put it's bananas or whatever. It doesn't matter. You look at the chart, and that comes back also. If I could come back to the emotional aspect, you got to take parts of all these guys and which one fits the best with your emotional profile. But that's like by trying it, right? You do a few trades. That swing trading's too long using Stan. I like the measured moves. I just could put my profit limits and then go to bed or go on vacation. When it's triggered. So I got that from Peter Brandt. Mark Minervini, he uses some stage analysis. He mentions in his book that he got part of his framework from Stan, but he adds in a whole bunch of other great information in there. His VCP formations on breakouts. Even on the fundamentals, he gives you some frameworks how to digest that. So those are like probably the three primary books that I reread every year and learn new things based on my new experience. I reread the book. That's what he meant, Stan, when he talked about that. So always reread, and that means if you get new insight in that same book that you read a couple of times, that means you actually learn something, right? It's like observe, practice, learn, rinse and repeat over and over and over. On Twitter, it's awesome Twitter for that. North Star, I grabbed some crazy stuff there. Was doing arcs and bulls. And that also comes like with the technology. Like, I don't know, back in the days, the guys, I think Stan had to plot his own charts. Well, now with TradingView, like click, I want a perfect symmetry arc. Oh, you could overlay that on your chart. You see how it fits. Look, there's a resistance here. The arc's moving upwards. That means we're making higher lows. Then we're squeezing in, less volatility. We're about to break out. It's great to see guys across the realm of Twitter using these different tools. And it just reminds you, instead of you getting stuck in your own ecosystem and your old-fashioned trading system, you could always grab new things and just try them out. Seeing even ideas that guys have. Oh, look at that ratio, how it relates. Look, this is a bull mode. Gold versus SPX is actually turning up above an inclining 12 moving average. Then you overlay the silver chart, and then you say, "Wow, look at that! The silver chart's it's analogous, right? Or it lags a few months. That gold to SPX ratio, something big is brewing up, right? So all that you do it. You keep an eye on it. You add it to your weight of evidence. If some of these elements start rolling over, then you could bail. I have to mention a gold tent. Gold tent is a crazy crew of guys over there. Like there's Plunger, Spock, Fully. They've been in the precious metal sectors for a whole while. I learned a lot about the complex of the precious metal sectors there, and they each have their own technique of trading. Some do classical trading, some more using indicators. There's just, you gotta, whatever you're in the realm of the precious metal sectors, grab whatever you can. Don't close your eyes and try to experiment. It's like the practice. It's like I always do analogy to Michael Jordan you practice so much more hours in the actual game. Well, you as a trader, you owe it to yourself. You need to spend 100 to 1 hours of practice and trying out things. And then when you do the actual trade, then you can't control the future, but that trade should have a higher probability of being successful.
Absolutely. So let's move on to specifics. You have a recent video that you put up about how to manage the precious metals markets. Step one, you start with gold, and when you see it start to outperform the SPX, so tell us a little bit about why that's important, and then where you go from there.
So that's like another part of being like, sometimes you just stumble on things. And when I stumbled on the gold to SPX ratio was turning up, but I didn't quite understand why it looked like the silver chart also. And then there was a Jordan that you've had on your show a couple of times, and he outlined that that's actually, it's a representation of capital flows leaving the stock market, entering the precious metal sector. So you're seeing that going through gold, outperforming SPX. After that, it spills off into what? Into the miners, gold miners. After that, it spills off to silver. It spills off to silver miners. So that's like the key. It's like the first element that has to happen. You need to have an inclining 3-year or 1-year moving average going upwards for the gold outperforming the SPX. And that's key for the whole sector. You got a shout out for Jordan. I learned so much. Just he's like I call him the master of the precious metal sector, because he covers A to Z everything. Like sometimes I feel like I could just stop doing what I'm doing and just follow Jordan, but I like it too much for my personal emotional learning curve. I want to be able to have mastered, and I don't think I'll ever will be or will have, like the whole precious metal sector, and even my charting framework, how I could adapt it and make it even more versatile and more probable of having success.
So once we look at that ratio start to revert, when gold starts to outperform the SPX, what's some of the next things you look at? Like, for example, the commitment of gold traders. So when you're looking at that, what are some of the other indexes you start to look into?
Well, yeah. So the commitment of traders, again, it's super fun to be new in a sector, because you don't have these old ingrained ideas. And what I've noticed and the commitment of traders always, from what I've observed, it works differently depending which future or contract. So for platinum or even copper, it's not the behavior. First, you have to analyze like the behavior of the traders identified in the commitment of traders, how they behave. And what I've noticed is for the non-reporting small speculators, like the cannon fodder, like that what people like to call, well, for gold, when the net position, so the total longs minus the total shorts of those non-reporting small speculators, when it's above the total shorts, that combined with the gold to SPX ratio going upwards, combined with gold having a monthly close above that 1350, when you add that up, you look in the past and the commitment of traders when the net longs, the net position was above the total shorts, we were in the gold bull eras. And right now, that's what's happening. We're like just at the beginning. I've done the multiple charts trying to outline it in different ways. But at the end of the day, it's that cannon fodder is actually fuel, and it's going to keep growing and growing. Right now, it's just beginning. And one day, there's going to be a lot more. That total position is going to be a lot higher than the total those total shorts. And maybe when we reach an extreme for a long period of time, then we could say, okay, maybe we're running out of fuel. Right now, the fuel is just starting. And it's so crazy because when I saw the bull market starting like at 1350, right now we're closing in on 1800 or high 17s. It's like you think that it's like we're already too far in, but when you take a step back and you look at the longer term charts, this thing is just beginning. It's really really insane and like a great moment to still be in the sector.
Absolutely. So when we see gold break above the 1921 level, what is that indicative of?
That means you overcame that important all-time resistance, right? There's different resistance levels depending on which time frame they're identified. So on the quarterly chart, the all-time defined resistance is at, I think it's 1775. So if we could get a quarter, January, February, March, April, May, June, so end of June, if we could close above 1775, that's a quarterly defined breakout. So even if we don't reach that all-time high that was reached intraday on the smallest of the time frames, which is noise, we're above important quarterly defined resistance. And now that's what I call a wall. That resistance now becomes support. So after that, there's a test of that support. And if we bounce off that, then off we go. So we could be actually a lot closer to an important breakout than people realize, the people looking on the smaller time frames. And same thing for silver. Silver, the yearly, I just did a yearly chart recently. The yearly defined breakout level for silver is actually $31. So yes, we had a price action in the 45s or a while back in the 80s and the 2000s. But if you look at the wick as noise put the yearly chart, we're actually at what did I say, $31? $31 is yearly defined. We never close a year above $31 for silver. If we close this year above $31 or next year, for me, that's go time. I'm not going to wait until we reach those all-time highs on the smaller time frames. I know that $31 is now going to become yearly defined support. So yes, it could sink back in, but I believe that's just going to be a wick during that year. But if you look on the long-term chart, silver in the bull market is able to have 1, 2, 3, 4, 5 years in a row of positive gains. And right now, silver is still, I believe, negative for the year. So if we turn this year and then positive from January to the end of the year for silver, that actually could be just the first year in a sequence of many years that silver will give you green closes. And if you want to, again, match your emotional profile to that, you could just buy silver at the end of the year. So if silver closes above, I think 1715, I think that's where I have it defined as a breakout from this point. You could just buy, close your laptop, and just check every year and forget the noise, and you could be good for many years in riding out this bull market.
As you were explaining, right now is somewhat of a paradigm shift for silver, or a major turning point. Is this because it's just trying to catch up to gold? What are some of the reasons do you think that is?
Yeah, so it's good. We like looking in hindsight. People always say, well, GSR is too high and silver has to catch up. Well, I don't think it has to do anything, right? If you really want to make it basic, you could just look at the silver chart and see what it's telling you by itself. So to reduce noise from time, I like using old school PNF, point and figure charts. So they actually just add a column of X's and O's when there's a sufficient price movement. And if the price movement stays within that column over time, if the price doesn't fluctuate that much, then that chart, it looks condensed. So right now, what I saw since those 2011 highs for silver on the PNF chart, it's a perfect channel, multiple retests on the upper boundary and lower boundary, all the way down to where we are today. And right now, it's hitting the upper band of that descending channel for the PNF chart, that noise-reduced chart. I think it's around these levels, 18 or 1775. If we close above that, we're starting to put the odds that we're trying to go upwards, right? Like we always have doubt. Maybe it's a false breakout. Well, you're testing a breakout. You're not testing a breakdown. So let's focus on the fact that the price action is trying to go upwards. If it fails or not, we don't know yet. But for me, it's combined with the plethora of evidence and the weight of evidence for the whole precious metals. Just gold. Just if you have doubt in silver, well, at least gold is breaking out, has broken out. It's already challenging all-time highs or close to. You got to put the weight of evidence that silver will try to break out and not break down. So for me, silver is like probably at a generational lows that were probably set in recently. Could it dip in? Could it dip in a wick? What I consider noise and touch lower levels? Maybe. But the trend for me, it's really, really trying to go upwards.
As we look at these charts, what are some of your upside targets? What do you think we could see out of gold and silver in the coming years?
I can't do those 5,000 targets because they could be probable, but for me, the most probable targets right now is I've done the PNF chart also, the noise reduced for gold. And before setting like I don't believe in stone targets, but you have to look at different angles, different techniques that you've grabbed from different people. Like what's a classical chart measure move for gold? What's the arc? Or where's the next resistance? Where's the PNF? Where's the channel? Like, try to find different ways to see where the targets would be. For me, the furthest I could see for gold, and I've had different angles of attack to see that target is 2,600. I think at 2,600, gold's gonna hit an upper band, a long-term upper band. That's really the target, the long-term target I could see right now. But the chart morphs, right? We don't know what's gonna happen. And as a chart morphs, we're going to get the different signals. But from here today, 2,600 is probably where we're heading for gold. Silver, same thing, in between 58 and 65. So if I look at the yearly chart, silver is giving me a measured move for that big cup and handle to 58. If I use my PNF chart and draw channels going upwards, I get about a 65 target. And that's like the weight of evidence again. It's like when you look at a street corner and there's a whole bunch of people and some people are going left or right, but if you take a step back, you could actually start seeing the flow of all these small moving parts, right? And then there's like a pattern. Well, the pattern for me, it's heading towards those directions. So 2,600 for gold and 65 for silver.
Excellent. So when we get up to those levels, obviously it's important to sell and take some profits. So you have three main sell indicators. Could you explain to us a little bit about what those are?
Yeah, there's a technique there that I've been working on because Stan's technique, it's very hard to sell close to the top of a range. You have to wait, you have to sell into weakness. So that means the price action is already starting to go down, you're below a moving average, and then you're selling into weakness. So it's really hard to trap that sell close to the top. So what I've been working on is applying resistance and support to moving averages. So distance from moving average. So let's say gold is historically, I plot the 1-year moving average, and then I could put as an indicator distance from that 1-year moving average. And then there's actually resistance. You could actually see how gold reacts when it's stretched, let's say 20% away from the moving average, when it's stretched above 50. And if you draw a resistance line there, you could start seeing what are the odds or the probabilities of the price action of gold reverting back to the mean to come back close to that 12-month moving average. And usually those spots are pretty good places to take profits off the table when you're stretched away from that moving average. And that's the closest I've got to having being able to call that actual top is or getting out some profits close to the top is see how it behaved previously. And when that elastic is too drawn out, then you could take some profits. The other one is, Peter Brandt, classical charting, measured move, no hassle. Just do the measured move from your identified chart pattern and put your stop limit there. And when it reaches it, don't even second guess it. You take out your profits from there. The drawdowns from that is what if actually the measured move was not the ultimate high, that's when the Stan Weinstein system is going to help you stay in the trend for as long as it goes up. And I've noticed sometimes they match those measure moves, even Stan used some measure moves, he called them swing targets. They often match also the top of even a stage 2 cycle there on an uptrend. That's what's like the beauty of charting is. It's like I call it like human artwork. A lot of people have different systems. They use Fibonacci to take profits. They use moving averages, measure moves, all that. But they kind of all come close to having the same type of similar targets. It's kind of eerie when you take a step back. So that's why I never judge anybody's framework. As long as they tell me they respect their own framework, for me, that's a success in itself. But mostly the price targets, they start looking alike. I'm pretty sure you had other guests that had targets probably maybe in my ball range, and they're probably measuring it. Some people on fundamentals, some people on different techniques. But if the targets all start looking alike, it's a good idea there that we could be reaching those targets.
As we wrap up, Patrick, are there any other charts you'd like to tell us about that you're looking at? Maybe some miners?
Oh yeah, the miners. Well, I've been shifting my focus to silver recently. AG, First Majestic, I really like recently there. It seems to be a vacuum. I don't have the chart in front of me, but it looks like maybe 19. It depends. Sometimes I look at the Canadian version, so I don't have the correct number. But most silver miners for me, they're primed to explode on the upside. SILJ, same thing, just to catch up to those 2016 highs. I think SILJ 2016 highs. I think it's 16. Or don't get mad at me, guys. I don't have the chart in front of me. I don't know it by heart yet. But those 2060 highs is, if you put it in relation to gold, that was 1350 for gold. So gold already went past that. And if you could do a projection on the other elements in the precious metals sector, the rest of the field, as a risk-on environment and expectation of inflations creep up, there's so much vacuum for these. For SILJ and most of the miners in the silver complex.
Excellent, Patrick. Well, your website and YouTube channel have much more detailed information about some of the stuff we went over today. That's badcharts.com and Patrick Karim on YouTube, correct?
That's exactly correct, Tom.
Perfect. Thanks for your time today, Patrick.
I thank you, sir.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?